Hi, my name is Kristen,
And my name is Orion.
and we're two members of um, Youth Advisory Council, and today we'll be talking about building your credit to reach your goals.
We welcome you to Money Mondays.
Today's objective, we will understand the importance of credit, impact of credit when buying a car, and when to start building credit.
There's this thing called a financial reputation. It's your credit history and credit score, and they're a big part of your financial reputation. Your credit equals your trust. So if you consistently do something like paying off your bills or just paying off your loan, then it will be fine. Like you can raise your credit score and financial trust based off of paying what you do on time.
Okay, a credit report is a report created by credit reporting bureaus on a person's history of debt, credit, and browsing. It's one or more it's one or more pages of history on paper, including personal information, credit accounts, public records, and inquiries. Credit score is a three-digit number that summarizes a person's credit worthiness reputation with their reputation. Generally a number from 30 what is it? From 300 to 850. The closest to 300, the riskier a person seems to lenders. The closer to 850, the more favorable the they look to lenders.
Here's a question for the people in the chat. Would you rather have credit report or your credit score? And has anyone done that before?
How can your credit go bad? By not paying like your credit cards off, by not paying your bills on time, by being late on payments that causes your credit to go down.
I've seen two messages for credit scores. Two people have checked that.
See,
And that's a
fine.
good thing. Now, some people have like the misconception that you can't get like a credit report if you're under 18, and some people don't. But you can start it with authorized user status, which is when you can be on your parents' account while you pay off things that you do with your credit card. And with that, you can build your credit score from a young age. So has anyone done that? Because it says 1 in 4 people begin with authorized user status.
I know I have. My grandmother, she puts me on her credit cards and it helps build my credit. So when I'm old enough to like get a car, get a house, and stuff like that, I'll have good credit and I'll be closer to 850.
Same with me, but it's my mother. So if you do have a credit report and you don't know that, someone may be using your financial reputation as their own. So they can get you a lower credit score.
Getting a credit report. Youth ages 13 and up can request on online one free copy of your credit report from the top three report bureaus on at the website. You can go to www.annualcreditreport.com or call the number on the screen. The main three credit websites is TransUnion, Equifax, and Experian.
Why is good credit important? Poor credit is viewed by lenders as a high risk. You may be declined for credit altogether, and loans and credit that are approved will carry high interest rates. For fair credit, which is, I would say, like 30% of the population have. They may be eligible for reasonable or good rates in terms, or cosigner or their cosigner or deposit may be required. A cosigner is you have to be under someone else, so you don't really want that. And with a good to excellent credit score, you're eligible for the very good or sometimes the best rates and terms. And you're viewed by lenders as a dependable person. That is a low risk to the company.
Leonard and Diane each have 10,000 5-year term auto loans. Luca's credit score is Luca's credit score is 500, while Diana, sorry, is 720. So her interest rate would be lower, which is 3.91. Her monthly payments would be lower, and it would be 184. Her total interest paid would be way lower, which is 1,025, and her final cost would be 1,125, while Luca's would be 14,729. So if you have better credit, your loans and your prices and your payments will be lower because they can trust you more. But in Luca's case, they're kind of iffy about if he can be trusted and trustworthy, so they're going to charge him more.
That's a difference of $3,000. Before purchasing your car, you may want to ask these questions. How much can you afford? Will you finance or sink a loan or buy it outright? If financing, how is your credit? Do you need a cosigner? Do you currently have any debt? Which are big questions. Or can you keep a car with insurance or maintenance costs? If you if yes to the terms in the box, you should research your loan terms like APR, which is cost on having a loan, or the length of loan terms, which is how much you must pay back.
Different ways to buy or finance a car. Cash saved up in full, no credit necessary. Bank or credit union may get more favorable terms that avoid markups at dealerships. Dealer arrange financing. Dealer is middleman to securing a lender for financing car. Or buy here, buy here, pay here. Dealership financing. Financing for people with no or poor credit history rates tend to be really high.
For the people in the chat, if you're planning to purchase a car, will you purchase it through cash or like any of these terms that are up here, and why?
I know from what I know, the most ideal is like a loan and pay it back. Even if you need a cosigner, I mean, you can always just get a loan. But I feel like cash is the best because you don't have to go through any of that. You don't have to worry about your credit. You don't have to worry about.
Lawrence Somerville says, I would save up cash and pay in full to purchase a car. LJB says, cash. Me personally, I think I would do it under like a bank or a credit union, but maybe if I was like a little more carefree, then I would use cash also.
Definitely. If financing is only option, there are where these are where you can use a good credit to get the best deals.
Shopping around for a loan is good practice. So you shouldn't feel pressured by a salesman into agreement without time to think about it because there are sketchy people out in this world and people just trying to get a good deal out of you, even if it means that you'll be in a little debt. And when you're at a dealership, tell the salesman not to run your credit if you aren't ready yet, so they can't do anything to it.
Credit cards. Debit cards. This is the money not borrowed. Does not impact credit history or scores. Secured credit and unsecured credit. For these are credit products and do have impact on credit history and scores. Now we watch a video about credit cards.
What's the difference between secured and unsecured credit? Secured credit generally refers to credit that requires you to pledge something of value in order to secure the loan. In banking terms, this is called collateral. Having secured the debt, your creditors may have the right to take possession of the collateral if you don't pay back the loan. For example, most standard types of mortgages and auto loans are considered secured credit because the loan holder can take possession of your house or car if you don't pay as agreed. On the other hand, an unsecured loan or line of credit doesn't require any collateral. Instead, it's based entirely on your good credit history. Most credit cards fall into this category, as does an unsecured line of credit, which is sometimes referred to as a personal loan, or in more official terms, a ULOC. That stands for, you guessed it, an unsecured line of credit. Because a secured loan, like a mortgage or an auto loan, involves less risk for the lender, it's got advantages. You can usually get a lower rate. The downside is, of course, you could lose the collateral if you don't pay. With unsecured lines of credit, like a credit card, you don't have to put your property at risk. The key downside is that unless your credit score is excellent, your interest rate will likely be higher.
Now, from that video, what did you guys learn from it?
I know for me, something that I heard
What's
that
the difference between secured?
I know for me, something that stuck out for me was the fact that if you don't pay your stuff back, they will take it back as collateral. So if you don't pay your house, they could take it away. If you don't pay your car, they could take it away.
Yeah, when I first heard that, I was surprised.
Yeah, you definitely should pay your stuff on time so that you can keep all your items and so that you don't have to worry about even the risk of them taking it.
So, for you people out there, here are some credit building products. So you could have an authorized user, like we said earlier, which was having a parent, a guardian, anyone you can piggyback off of so you can build the credit with them. Or you can take out a student loan and just pay off your loan while going to college, so you're getting something back. Or there are even credit builder loans where you can take out a loan and just pay the loan back and you gain credit also. So there's like loans just for that. And that's how you can build your credit.
Key takeaway from building strong credit: keep it active, keep it low, and keep it up. Establishing, well, they're the main three things that you need to do in order to keep your credit score strong. If you keep it active, then you'll have to worry about it getting lower from not being used. And if you keep it low by paying your debts off, then you have a less chance of bad things happening, like having to be charged more or them taking your items. And keep it up means if you want at least 6 months of your credit history, make sure you keep your activity going and check your credit report at all times.
Now, what's the biggest factor of your credit score? As you can see on this, we have the length of the credit history, the credit mix, new credit, amounts owed, and your payment history. So, what is the biggest factor of your credit score, people in the chat? You should always pay on time. And if you anticipate not being able to pay, contact the credit card company or loan provider to rearrange your payment schedule.
Yep, Thomas got it right.
Payment history, yes. Yes, credit equals trust. If I hand Kristen a pencil and she doesn't give it back to me, tomorrow when I ask for it tomorrow? Am I going to trust Christian when I ask for it the next day? But if I do that same thing with someone else and they hand it back immediately, I'm going to trust them more. That's the same thing about credit.
Student debt is definitely student debt is definitely something to think about, especially when you're getting a student loan. So you gotta be mindful of certain things.
Do you guys have any questions for us? Thank you.
In our live stream.